A recent poll by a much loved and massively respected property expert has revealed that around 33% of you are worried about getting rejected for a mortgage or have been. In this video, we're going to go over the most common reasons why you may be turned down for a mortgage and the best way to avoid that happening. Hi there, Lee Everett from Lee Everett Property, and on this channel I'm passionate about helping as many first-time buyers buy their first home. Over the last 17, 18, 20 odd years, I've helped thousands of people move home. So if you're after the best tips and advice, please hit subscribe. If the lender you've picked to source your mortgage has rejected you, chances are you don't fit their lending criteria. Every bank or building society have their ideal applicant for which they would prefer to lend money to. That's why if you are declined by one lender, it doesn't necessarily mean that others won't accept you. You just need to find that perfect lender for that perfect fit with you, and this is where a mortgage broker will help you greatly. Now let's look at some common reasons why your mortgage application could be rejected. The first one is having a poor credit history. If you've been rather silly with your finances over the last 6 years or within the last 6 years, missing payments, defaults, CCJs, then lenders are going to see you as a high risk applicant. If you do have these blips on your credit report, it can really hinder your chances of being accepted for a mortgage. So it's very, very important to check your credit report before you even think about applying for a mortgage. The second thing which can hinder your chances of having your application rejected is applying for too much credit in a short space of time. If you're applying for credit cards, loans, anything like that in the months leading up to applying for a mortgage, then this can be a bit of an alarm bell for most lenders. It could show that you're currently struggling to keep up with your current financial commitments, so keeping these applications for new credit to an absolute zero is so key when applying for a mortgage. The third most common reason why lenders can reject your application would be that you have too much debt already. If you've got tens of thousands of pounds on credit cards, loans and all sorts of things like that, then is a bank going to consider lending you potentially hundreds of thousands of pounds if you are already in a lot of debt? Having a mortgage is probably the biggest financial commitment you'll ever have in your entire life. And lenders have a responsibility not to let people who are already in a lot of debt get even more in debt by giving them a mortgage. The fourth thing on this list is so easy to miss and to forget, but it's also the most easiest thing to actually put right as well. And that is getting yourself on the electoral roll. If you're not on the electoral roll, banks cannot verify that you are who you say you are. Being on the electoral register means a bank can verify who you are, and it also improves your credit report. The fifth most common reason why you may be declined a mortgage will come down to affordability. The checks they will do on your income and your outgoings will have a huge influence on whether a lender will lend you A, the amount you want to borrow, or B, at all. If they feel that the money they're going to be lending you is going to be unaffordable to you, they have a financial responsibility to say no, unfortunately. While you're here, if you are getting value from this video, please give it a thumbs up, would much appreciate it. So how can you improve your chances of being accepted for a mortgage? Let's go over some things right now. The first thing I'd recommend is to check your credit report. Every mortgage broker will always advise you to check your credit report. And please, please, please ignore the credit score that the referencing agencies give you. The score is not looked at by lenders at all. They look at the individual pieces in your report, like your credit commitments, your income and your outgoings, all those sorts of things. So your score doesn't mean a thing to the mortgage lender. You want to be checking that there's no missed payments, no defaults, no CCJs on there, because anything in the last 6 years will be on your credit report and could have an effect on your affordability and whether somebody would lend to you. And while you're looking at your report, if there is anything on there which isn't correct, like there is a missed payment which wasn't actually a missed payment, you can write to the company that has that blemish on your report to get it put right. So it's very key to make sure any mistakes or anything that doesn't look right is rectified before applying for a mortgage. The next tip, we mentioned it in the previous segment, is to get on the electoral roll. It is the most easiest way to improve your credit worthiness, is to get on the electoral roll so the bank knows you are who you say you are. That one thing alone can really, really, really hinder your chance of getting any type of finance at all. The third thing to do whilst thinking of getting a mortgage is in the months before even thinking about buying a house or getting a mortgage agreement in principle, is not to apply for any credit whatsoever. It can be very tempting to apply for a loan to get a car or a credit card to go and buy that holiday that you've wanted to do over the last 2 years, but you haven't been able to. But it's very, very key that you've got to think clever, you've got to think smart. If you want to make yourself look the most attractive as you can to a lender, having no credit applications against you in the months leading up to applying for a mortgage is a massive thing, and you should try and not do it if at all possible. And even once you've got your mortgage offer, if you get that far, don't apply for any credit until after you've exchanged contracts, or even better, actually completed. Sometimes lenders can and do additional credit checks further down the line, even after your mortgage offer has been issued. So when you've got your mortgage offer, you're not quite over the line yet. Don't apply for any credit until ideally you've actually completed and got the keys to your new home. Number 4 on the list is to start paying down any existing debt you currently have. If you owe money, then this does go against you. It affects your affordability. So if you can start paying off any debt that you have prior to applying for a mortgage to try and get that as close to zero as possible, that is going to improve your chances a great deal. And if you get that debt completely down to zero, that money you have been using to pay off debt, you can actually put towards your deposit and increase your loan to value. This will also help your affordability, because if you're not spending money paying off debts, then that's more money that can go towards paying off a mortgage. And that leads nicely on to the last point. The more money you have left over at the end of the month, the more disposable income, the better and more attractive you look to a lender. If you have silly direct debits or standing orders that you don't need, or you've just forgotten to cancel, I'm talking gym memberships, Spotify, Netflix, any of those things that you don't use, and are just wasting money each month, cut them back in the months leading towards applying for a mortgage. The more money you have left over at the end of the month, the more disposable income you have and are able to save or have sitting in your bank account, makes you a very, very attractive prospect for a lender. I hope this video has helped. If you are interested in what's going on in the property market, I'll leave a video up here or here, can't remember which side. Thanks again for watching, and I'll see you next time. Take care.